I am the Tofu Golem. Please enjoy the video.
You begin by defining clear criteria: time horizon, position size, and maximum loss. Once done, run a focus screen for stocks matching momentum, volume spikes, and reasonable valuation. Make sure to prioritize catalysts, earnings, upgrades, or sector rotation, because catalysts drive immediate moves. Next, shortlist 5-10 names and rank them by risk-adjusted return potential. Do not delay. Start with one trade idea and document your entry rationale, target, and stop so you can test in live conditions. You now deepen conviction by blending technical and fundamental checks. First, identify precise entry points at support, breakout, or pullback levels while confirming trend on higher timeframes. Then quantify fundamentals: earnings growth, P/E versus peers, and margin stability to justify a price target. Once done, simulate 3 scenarios: base, upside, downside, and assign probabilities. Make sure to size the position by expected drawdown and adjust stops using volatility. This disciplined sizing prevents emotional overtrading and preserves capital for the next opportunity. You execute using limit orders and immediately place an initial stop and at least one profit-taking level. Once live, monitor price action and news feeds to confirm the thesis holds. If fundamentals or technical structure change, act quickly. If the trade drifts into a high-probability reversal, reduce size or exit rather than hope. For troubleshooting, reassess catalysts and model assumptions. If probability flips, cut losses decisively and record lessons. This closing routine preserves capital and improves future decision-making.
Thanks for watching. Consider subscribing if we helped you today.